Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday. Got Thanksgiving, just a couple of days away. Get out there, get those turkeys bought. Got to spend that money because retailers continue to bring more gloom to the holidays. We'll tell you all about it, but just a reminder. Tomorrow's our last day for the show for the week. We'll be closed Thursday and Friday for the Thanksgiving holiday. But don't worry. You can always go to allamericangold.com and order 24 hours a day, 7 days a week by clicking on that shopping cart button. And I'm just going to tell you, we have got another great sale today. We'll have them all holiday season. Well, we always do. They're always great, but we're going to make it worth your while. Just call us 800-951-0592 and place your order today. And Jason, we heard from Lowe's, we heard from Kohl's, we heard from Best Buy that the holiday season is anything but. We had existing home sales out. A number I didn't think we'd ever see again happening here. We're down to 3.7 million homes sold on an annualized rate. There was only 1 month, and it was very brief, real quick, and I want to say it was like 2010. But outside of that, and there was some funny business going. I got to remember that was a lot of times. Remember the house? You had the one company owned the first, the other one owned the second. Right? They were going to tell you, don't move out yet. We'll tell you when to leave. Nonsense. But I mean, we're talking about like 1990 type sales numbers. We hit all-time record lows. At least when I say this. Since they've been keeping the data, at least in modern times, all-time record home sales in the West and in the Northeast. And Jason, it's really kind of one of those things where, at least for the last couple of weeks, interest rates have been falling. Matter of fact, the 10-year note down again today. We've got a huge rally back in gold and silver. Gold's above 2,000. Matter of fact, 2007 right now. Silver at $24 as it does appear, right? The slowdown appears like we're slowing more. In other words, hey, we knew the slowdown was kind of late September into October. Things were slowing down. And now, Jason, into November, at least from the retailers and homes anyway, things are getting even slower.
You know, you go to the Boulder area and you buy an average family home, it's $2.5 million. You buy a little closet apartment, it's $800,000 or $900,000. I've seen like 700 square foot, 1 bedroom, 1 bathroom for $800,000. So, Joe, yeah, people aren't going to be able to buy that with the higher interest rates. But on top of that, Joe, even if you think about this, if we had a 50% housing crash as far as values, that little house for $2.5 million is still going to be $1.25 million. So yeah, there's room for the housing prices to go down, but the inflation is still right in your face. When an average home in the Boulder area is going to be $1.25 million, if it loses 50%, we are in a crazy situation.
We're approaching. We're not there yet. But from the high, go back to home sales in like 2001. We're closing in on being down 50%. 50%. I mean, it's hard to imagine. You know, we saw this happen before, right? And that was the housing crash. And prices crashed. We're down almost 50%. And unfortunately, prices are still going up. Here was the weird part. And this just kind of seems like this is the new housing market. If your house is really, really nice, it's going to sell. Matter of fact, it's really nice. You're probably going to get multiple offers. If your house needs work, it ain't going, right? Because, again, wait a minute. You want me to pay how much? And then I've got to go in. I got to remodel the kitchen. I got to remodel the bathrooms, right? I got to get the new cabinets, new floor. And again, those were things that used to be reasonable. Not anymore. Lowe's today. Lowe's was probably the big news of the day in how fast sales have disappeared. Lowe's slashing its full year sales and earnings forecast. And Jason, it was really, really deep misses out of Lowe's. Lowe's says that, hey, we're the big do-it-yourself, the DIY. That's what we're known for. Okay, I don't know, right? Sure, that makes sense. If you say 75% of their sales is do-it-yourselfers, let me give you an idea. Net sales down 13% year over year. They were talking about gross profits down 12% year over year. And Jason, they're really just saying, hey, listen, people can't afford to even do it themselves anymore, right? Going in and, hey, I'm gonna do new flooring by myself. This is what inflation does. And again, we've never been able to avoid recessions. Yesterday, we circled the calendar, February. You've got a little time left. Call us. We'll be back. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. The Dow is down 80 points right now. The S&P is down 17. The NASDAQ down 120 points. The 10-year note, 440. The bond market now looking like, hey, recession. We're showing recession. We think something bad is going to happen here. We'll see. We've taken another leg down. There's no doubt about that. We haven't even talked about Best Buy and Kohl's yet. We'll get to those in a minute. The gold markets, gold pouring it on today, up $26 right now. $2,006. Silver's up 40 cents at $24. And again, if you're sitting there, we keep talking about diversification. Think about it. Listen, we laid out the case yesterday about why February is so important. What are we going to do? Right? We have leading indicators, which now in February will be the longest streak of negative leading economic indicators since they've been keeping records, taking out the financial crisis. So what happens when we talk about yield curve inversions, right? Same thing. Big crashes. Those are the signs that you get for big crashes. But then you throw in things like, that's exactly where they kick the can down the road again. How is Congress going to keep spending all of this money? Look at what Lowe's and all these companies. Think about how much less tax revenue, not only tax revenue federally. Think about all the tax revenue in these cities. I mean, Lowe's, Home Depot, remember Home Depot, they reported, a week and a half ago, they were terrible. That's a lot of tax. That's a lot of sales tax revenue. Not to mention, you have the government, right? The Treasury. Oh, yeah, that's the same time they need to do some more. Well, our checkbook's going to be really low. We got to sell even more debt. You want to be diversified. Check out our friends over at YRefi. You can get up to 10.25% fixed. It's not correlated to Wall Street. Doesn't care what the stock market does. Quite honestly, it doesn't care what Congress does. Shut down the government. Don't shut down the government. Keep spending. Try to spend less. It doesn't care about central banks and Best Buy. Listen, they told us ago, hey, we expect sales to be down about 4.5%. They almost doubled that number today. Said, whoa, did we say 4.5? Yeah, well, you know what? How about 8? 8% down, and getting ready. Their CEO saying it looks like we're going to have to get even more aggressive in our sales items for Christmas. Kohl's, same thing. Another mirror image, right? Kohl's also big change in the consumer. And it's funny how it works because it really is. It was gradual, but then all of a sudden there's another big leg down.
Another big leg down, Joe. I mean, 13%, you're right. That's a big number. You don't want to run a business and then talk about how you're down 13%. That usually means, hey, what do I cut? What employee do I not need? What branch or office or building do I have to shut down? And these are the indicators that show us very starkly, Joe, that we're going into this recession. It's like we've been talking about it for seems like a couple of years, but it's been this slow move towards a crash. Everyone knows it's there, but it's like they've put us in some NFL ultra slow motion review. Was it a touchdown or was it out of bounds sort of thing? That's what it feels like, Joe. It's like we're like you're like looking really close in to see if the ball crossed the goal line, and it is. The ball is going to cross the goal line. The recession. Joe, I mean, I think when the recession starts, when they actually start to call it a recession, whatever time next year that is, once they admit that there's a recession, I bet that's when it really gets moving. It's going to really get moving. Right now, fortunately for the markets, I guess, there are some people that have to spend for Christmas. There's a lot of people that still love Christmas, and they're going to spend a little bit more money, but they're not going to be spending it in January, Joe.
Yeah, it's again... across the board, Best Buy CEO calling the consumer now. Listen to this. Consumer demand has become even more uneven. That's a nice way of saying slower. But has now become difficult to predict. So the CEO of Best Buy saying, listen, I don't know. Right? Hey, we don't know what's going on with the consumer right now, and it's something to where we don't have a lot of visibility. So, Jason, these are all signs that things have taken a dramatic turn here. This is something, we've kind of been waiting for it. When does enough of the consumers run out of money? And it seems like that is occurring as we speak. And then you go to existing home sales fell another 4.1% month over month. That's big. Those are big. We've been seeing down 1%, 2%, 4.1%. Sales are now down 15% year over year. But really, things were getting pretty slow this time last year. Go back 2 years, we're down almost 50% when it comes to sales. They said that record low, as I told you, in the West, tying an all-time low in the Northeast. Sales fell pretty much everywhere. The Midwest was flat. Everywhere else, sales were down. And Jason, the thing that they talked about in this report was, hey, by the way, the number of homes increased to 1.15 million. Now, here's the thing. That's actually the lowest for any October in the modern era. The least amount of homes for sale. But when you're only selling 3.7 million, right? You still got, hey, we got a supply of 1.15 million homes. We're almost kind of getting into some balance here with supply and demand. But the problem is, Jason, even though the demand is so abysmal, there's still not a lot of supply. It's not great. It's not like, hey, in the past, right, we'd have 2 million homes, 3 million homes for sale. Barely over 1 million homes for sale, even as these sales keep falling. They were talking in the report, either your home sells fast for multiple offers, or it doesn't sell at all.
Yeah, you just said that earlier in the show, Joe, that if you have a quality house, you're going to have a market for it. There's still people buying houses. But for how long, Joe? I don't see any rate reductions, rate decreases coming from the Fed. So the interest rates are going to stay high to buy a home. And as the recession hits and job losses come in, how can houses, I don't think the house crash, like some of these guys say 50, 60, 70%. I don't see that happening, but there's going to be a reduction in the value of homes when there's no buyers. It's going to happen. At some point, you're going to have a really nice home, and you're going to have to lower the price, Joe, because all the other nice homes are going to go down.
What are you going to do with all these homes that need work? Because I get it. Listen, I'll use the house right next to me. It had been for sale for all of this year, the whole year. The for sale sign just got taken down. Now, the homes where I live, they're all, the ones that sell are selling for $1 million plus. This home is priced right when you look at the square footage. Right? They wanted $800 and some thousand. But the backyard sucks. Right? There's nothing in it. It needs to be totally redone. It's got to get done, really. The inside, the cabinets all need to be replaced. A lot of the flooring needs to be replaced, right? All of that other stuff. And people are like, wait a minute. For me to actually want to live in this house, by the time I buy it and fix it, it's over $1 million. I might as well buy the one that's over $1 million that I don't need to fix, right? And here's the problem. They can't qualify for that house. Well, I can't qualify for the $1.1 million. And I don't want to buy this $850,000 house because, it needs too much work. I don't have any, I'm already all in at that number. This is going to be interesting. Could we see, I don't know what's going to happen, but they took the for sale sign down, and I'm sure they're going to wait till after the holidays and try to relist it again. But Jason, it really is one of these things where this housing market has gone, everything's ass backwards, and it's the Federal Reserve. They're the ones that left rates at zero forever. Right? Think about this. The way Janet Yellen and Jay Powell did those Treasury auctions. Let's not forget, they screwed us. We should have been selling 10, 20, and 30-year debt up the wazoo. Well, when rates were still at zero, they wanted rates to be as low as possible. They sold all that short-dated crap. I say crap because guess what? Now it's coming due. Now we got to sell all the long-dated stuff at super high rates. The people that have a 3% mortgage, Jason, I don't know that they'll ever move.
There's no reason to, Joe. I mean, the reason to move is because you're either going to get a nicer house and improve your standard of living, or you're going to move somewhere else. And both of those things can be shut down by simply saying, hey, we don't need to move somewhere else now, and we don't need a better house now. And usually a better house means more, but now a better house means more on the loan side and more on the price side, it's a daunting situation to want to move. You know, for the people that have moved in the last few months, yeah, I can just feel the pain of that big mortgage if you had to borrow any of it, because that's tough. Yeah, that's a tough thing to have to deal with. It, you had this 3% or 3.5% or whatever it is, the mortgage. You know, who knows? Maybe you're so many years into it and you're kind of happy you're moving in the right direction, but then suddenly, job change, or I don't know, your kids are going to college, you want to move to where they're at, or any number of reasons why you have to move, and suddenly you're, well, at $1,700 or $1,800 a month payment, that was sure nice, and now we're, for the same amount of money that we owe, we're looking at $2,800 a month. You know, we're not going to put any more down, right, Joe? We're going to take that equity, buy the next house, and the same amount of loan financed is $2,800 instead of $1,800, right, Joe? That's what interest rates do. It's what the inflation has done to this thing, Joe.
Yeah, and again, you're talking about 50, some places 100% more on the monthly payments because of the interest rate moves. That's the kind of thing that's happening. And again, I think this is all just setting up again. What the slowdown has gotten slower, and now we're setting up. Are we headed for recession? Another one of these convergences for early next year. Jason and I, we're going to be right back after the break. $800-951-0592. Joe and Jason on this Tuesday. Gold right now, $2,005. It's been as high as 2007, 2008. Silver just under $24. But Jason, we've got two great specials today. You know, yesterday we ran $10 liberties, and I know, can we go back and do it again? Well, I can't. But here's what we're going to do. $10 liberties, 1 through 9, at $1,090. If you buy 10 or more, at $1,085. But I'm going to incentivize you a little more. For every 4 $10 liberties that you buy, we're going to give you a VG plus or better pre-1921 Morgan dollar. I mean, you're talking $35 to $40 on VG plus or better pre-1921 Morgans. So if you buy 20, let's just say you buy 20 tens. Give me 20 of them at $1,085. That's $21,700. But you're also going to get 5 pre-1921 Morgan dollars. If you buy 4 of them, you'll get 1. Buy 8, you'll get 2. And I know for a lot of people, you're like, man, I wish I could do it. I'd love it. I'd love to do that. It's a little pricey. That's a little too much for my pocketbook. Well, silver. And we've been waiting, and silver, let's face it, silver it's done well, but it's got a long way to go. But right now we've got rolls of silver $half. You're going to save $10 a roll at $220 a roll. If you buy 25 rolls or more, so 25 rolls is a quarter bag of silver $half, pre-1965 silver $half, it'll be $215. That is the cheapest price per ounce, outside of dimes and quarters, on any government-issued silver $half. Or silver, like Silver Eagles, anything U.S. hallmark. This is as cheap as it gets. You get 20 silver $half, $220. By 25 rolls or more, $215. But to give you an idea of how good of a special the $10 gold liberties are. So these are the older ones, right? 1866 to 1907. Right? Why, you know why we like old gold better. It's classified differently. It's the most private way to own gold because you can buy it, sell it, trade it. I don't have to worry about getting your Social Security number. You don't have to worry about 1099s. But I went out and I looked, and I was just curious. What's a half-ounce American Gold Eagle going for? We really don't, we sell some 10th-ounce gold Eagles. We'll sell some, 1-ounce gold Eagles in IRAs and stuff like that. But I went out and I looked. And I went to the two biggest online retailers there are. One of them has their half-ounce American Gold Eagle, 1 through 19, at $1,169. So 1 through 9 for us, we're at $1,090. The other one, 1 through 19, was a little more, $1,175. Again, we're at $1,090. At 10 or more, we go down to $1,085. These guys, I'll give you the cheapest price they had. One of them said if you buy 80 half-ounce American Gold Eagles, it's $1,154. The other guy said, hey, if you buy 120, it's $1,160. Now, there's about, $30 more gold in a Gold Eagle than a $10 Liberty. I mean, it's 0.016. It's a minuscule amount. But, Jason, this just tells you how much less you're paying for a $10 Liberty than you are paying for a half-ounce Gold Eagle. And on top of that, every fourth one, you're going to get a pre-1921 Morgan dollar.
Yeah, never forget that little extra silver you get with the special, which is great. And half-ounce Gold Eagle versus $10 Liberties. I would say there's advantages and disadvantages both ways, but there's far more advantages going with the $10 Liberty with what we're selling, especially on price. And, when you're dealing with the Patriot Trading Group, we specialize in these coins, the buying side or the selling side of it. So you can know, Joe, when you buy these coins, that if for some reason in your future you need to liquidate and get money for whatever, you can bring them back to us. And so if you can buy them on special before you have to sell them back to us in short term or in long term, you're going to do really well. I mean, Joe, we've had some guys coming in and selling, and guys that were buying these coins at $500, right? Buying them at $250, and you go further back, which shows you the pattern of gold going up because inflation's not going to stop. So this is a great place to buy, Joe, and the silver too. Half dollars are always a welcomed part of your stacking, Joe.
Yeah, I love the half dollars. They're obviously, when it comes to utility or junk silver, whatever word you want to use, the half dollar, that's kind of the Cadillac of the junk silver market. It always has the higher premiums. They're sought after a lot more. So again, same thing, $220. Buy 25 rolls or more, save another $5, $215 on a roll of pre-1965 half dollars at 800-951-0592. And I just been told the $10 Liberties, we've only got 70 coins left. So act while you can. Get them put away. You're not going to be able to buy fractional gold cheaper anywhere, especially U.S. government hallmark gold. 800-951-0592. Jason and I, we're coming right back. Stay with us. 800-951-0592. Joe and Jason here on a Tuesday. And I get, I'm going out of town. I'm not going to be, don't worry. Lock it in today. Pick it up next week. No big deal. Matter of fact, we won't even have the coins here until next Tuesday. But if you've never ordered, maybe today's the day. Man, gosh, I got to have that. Got to have it. I mean, think about a pre-21 mortgage. That's at least $35. And that would be cost. $35, right? Probably closer to $40 retail. And you're buying $10 Liberties, 1 through 9 at $1,090. I mean, you're like $80, $85 less than a relative cheaper one. These guys are big online. They're cheap, right? They think they are. A lot of places you're talking about $100 more less than a half-ounce American Gold Eagle. And throw in the Morgan dollars, right, Jason? And it's huge value. 800-951-0592. If you're brand new, just call in. Tell the girls you want the special. They're going to ask you how many you'd like. I mean, that's it. There's no bait and switch. We're not going to try to trick you or, oh, my gosh, let's just get them to call and then we'll tell them to buy something else and rip you off. We don't play games. We don't do that. Matter of fact, we don't even make outbound phone calls unless you tell us, hey, will you call me, please? Otherwise, we don't call you at all. You lock it in. You can pay by check, cash. If you live in Arizona or Colorado, want to come to the office, we take all 4 major credit cards. We do charge 2% for the use of the credit card. We don't operate like a coin store. You know what? There's elements, and you guys know, if you've ever been to coin stores, you know. You got those elements in there. Right? You got the guys that got drug problems, right? They're selling scrap. They're in there. They stole stuff. You don't want to deal with that stuff. People knowing your business. We do everything by appointment. That way, it's privacy. I don't know if you figured it out yet or not. Privacy is pretty important to us. And usually privacy is really important to our customers as well. But yeah, you lock it in today. When your product's ready, one of the girls is going to call you, set your appointment, where it's convenient for you. Bring your money, take your product. It's just that easy. 800-951-0592. And I'm getting a little worried. Politico. Talking about what's coming January, February, the government shutdown. Democrats are now talking about let's just raise taxes. The Republicans are saying, well, we want to cut spending. Unfortunately, the feeling in Congress right now, Jason, is our elected officials don't really have the stomach for either one.
I don't think the Congress and the Senate have a stomach for anything except for doing what their money tells them to do, Joe. So if they want to kick the can down the road and push it back to January, late January, like they did, that's what they're being told to do. We don't have decision makers. We don't have leaders there in Washington.
No, let me tell you.
The money powered, they decide what to do, Joe.
Right. Let me tell you this. No amount of spending cuts is going to work. Because where's the money? Are you going to cut Medicare, Medicaid? No. You going to cut Social Security? No. How about defense? You cut in defense? No. Interest on the debt, you can't cut that. Because, well, the Fed screwed us all. Well, guess what, guys? That's pretty much the vast majority of the entire budget. There's nothing left. So any cut would be insignificant. Right? Raising taxes, whether they want to raise taxes, don't raise taxes. Taxes are going up, and they're going up in the next 3 years. I don't care who you are. It's going to be right when the new currency comes in. I got a feeling. How about this? You don't think it's, you know, there's people out there that still don't believe it. The IMF has now put out their central bank digital currency virtual handbook. Yeah, see, you go right to their site. You can get it yourself. Yep. Here's our central bank digital currency virtual handbook that can reduce dollarization of the global economy. Isn't that interesting? See, we got it all set up. Don't worry, the U.S. dollar as the reserve currency will be no longer, and we will move to a central bank digital currency. And Jason, why do I get the feeling that the confidence, the full faith and credit, right, which is why people buy treasuries, sure looks like what the IMF is saying is, yeah, that confidence is going to be gone. We're going to have a new system, a new digital-backed currency. And again, this kind of goes into, if you're Agenda 2030, if you're the World Economic Forum, if you follow that, as this follows that, where, hey, we're going to have kind of a new system in place, and it's going to be, maybe it's a basket of currencies, maybe it's backed by commodities, but the IMF's going to be involved, right, Jason? Their special drawing rights, right? Don't worry, the World Bank, they're going to be involved as well. Yeah, time to get that gold put away. 800-951-0592. Jason and I wrapping it up right after this. 800-951-0592. $10 liberties, 1 through 9, 1,090, 10 or more, 1,085. Every 4 you buy a free pre-1921 Morgan dollar. And then on the silver side, rolls of 20 pre-1965 silver half dollars, $2.20 a roll. Buy 25 rolls or more, $215 at 800-951-0592. Now, let me read you a little bit of this handbook, because I think you're going to find it interesting. Because I think this has already been, this has already been decided. We're in on this. It makes a lot of sense to me now. We're setting second year in a row all-time records for central bank gold buying. We've never seen so many foreign countries not show up to our auctions. Never. In this handbook, they want to increase the use of central bank digital currencies to reduce the use of the dollar. They said a situation where countries move away from relying on the U.S. dollar as a reserve currency. De-dollarization is pushing up a borrowing cost in the United States. Boy, isn't that true? Isn't that true? Look how much more debt we still got us. I'll wait till February. Making loans more expensive for businesses, for individuals, thus affecting economic growth. What did we just talk about today? We've taken another step down here. Listen, I ran my back out to the car guy. I've never seen him like this. It's that dead. Stock market values can also crash. Uh-oh. Why would they put that in there? That's kind of weird. And it will reduce the savings of investments for Americans. De-dollarization, a central bank digital currency, could increase risk of flight to safety from retail bank deposits in periods of market stress. See, they're like, see, if we just had these central bank digital currencies, you could take your deposits and just buy digital currency instead. Kind of like Bitcoin, right? Right? Same thing. They're pretty much telling you, boy, any American that's got money in the bank, get ready for a big haircut. 800-951-0592. And all you cash guys, the central bank digital currency, yeah, it can replace cash because cash is costly to distribute. And, let's face it, it probably has COVID too, right, Jason?
Anything they can do to make cash look bad, right?
Right.
I still find it fascinating that, they took the gold out in 33, they took the silver out after 64, they even took the copper out of the pennies in 82, and now the money that has their name on it, it's their money, the Federal Reserve note, is a problem for them, Joe. I find it so interesting that their own device that's been stealing from us over the years is now a problem for them because we've gone so far down the river, Joe.
Make sure you like us on YouTube and Rumble. Share it with your friends.